This is Matthew Kratter's Bitcoin University. Today I want to talk about Bitcoin, the IMF, and El Salvador. But first, some necessary context. Why do governments everywhere love their central banks so much? Why is it that both parties in the U.S., for example, disagree on so many things but agree for the most part that we should have a central bank? Well, the central function of a central bank is to extract wealth from the people of a country and everyone else who holds the currency that is issued by that central bank. Central banks print up new money to buy the government bonds that no one else wants, or at least no one else wants at a reasonable interest rate. They buy up the government bonds that no one else wants, thereby helping to finance government deficit spending. And central banks obviously do this with freshly printed fiat money, thereby diluting the holdings of those who are storing their economic energy, in other words, their savings, in that fiat money. So money printing really is a stealth tax that picks the pockets of savers and productive people and funnels that economic energy to governments. And this is, of course, in addition to all the taxes that we already pay at the local, state, and federal level. Now, knowing this, it probably will not surprise you to know that there are also supranational institutions that serve a similar function. The IMF, the International Monetary Fund, and the World Bank are two of these. And on the surface, the IMF certainly looks like a benevolent institution. The IMF is an organization of 190 countries working to foster global monetary cooperation, secure financial stability, facilitate international trade, promote high employment and sustainable economic growth, and reduce poverty around the world. What they don't tell you here is that most of those countries have a very, very small vote. The IMF is dominated, obviously, by the U.S. and the EU states. The IMF and World Bank started out as fairly benevolent entities that were established as part of the Bretton Woods system and the deployment of this new global financial system that was built on the U.S. dollar at the end of World War II, doing benevolent things like financing the rebuilding of Europe and Japan after World War II. These were the original functions of the IMF and the World Bank. Governments are great at spending money to blow things up and then spending more money to rebuild them, so I don't miss the irony of us bombing vast parts of the world, maybe for good reasons, maybe not, and then spending even more taxpayer money and other money to rebuild them. But both the IMF and the World Bank, even though they started off relatively benevolent, were quickly captured and subverted. And today they're part of a wealth extraction scheme that diverts capital and resources from poorer countries to richer countries. In other words, like so many modern institutions, they do the exact opposite of what they claim to do. What the IMF actually does, it's an important functioning part of an international crime cartel run by the U.S. government, the EU, the major central banks, the World Bank, and other supranational organizations and NGOs. All exist to subvert democracy while extracting resources from people and using them to line the pockets of the quote-unquote elites under the guise of helping the global poor, stabilizing economies, and other things like this. The IMF itself is a bit of a cross between a loan shark and a drug dealer. They work hard to get a country hooked on debt, and then they use that debt addiction to gradually siphon off capital and natural resources. Much of the work of the IMF and the World Bank adds up to something like colonialism 2.0, where a country's money, capital, and resources end up flowing to Washington, D.C., London, Paris, Brussels, and Berlin. While the bureaucrats get to virtue signal that they're quote-unquote helping people, dictators like to work with IMF because they get large cash infusions that they can share with their cronies or spend on private jets or yachts. And the IMF likes to work with dictators because they make it easy to sell out a country and its people. If you're finding this video interesting and helpful so far, I just ask you to help to support the channel. Click the subscribe button. That really does help with the algorithm. Leave a like, leave a comment, question, suggestion for a future video, and share this video with a friend or family member. So here's how it works. Let's say that you're one of those parasites on the body politic that we call a modern politician. You're not a human being who creates anything of value for the world that you can trade goods and services for. So instead, you need to steal from productive people who do. You definitely like to spend other people's money, and lots of it. If you're an American politician, you get to rely on the Fed to print up more money whenever you need it. But if you're some tin pot dictator from some small country, you don't have access to your own money printer because your own local fiat currency is an even bigger joke than the funny money that we call the US dollar. No one wants to be paid in your local currency or offer you a loan in your local currency. at least no rational actor. So when you get in trouble from overspending, unlike an American politician with a money printer, instead you need to go to the IMF or the World Bank with hat in hand as a tin pot dictator. Like your local loan shark, the IMF or World Bank will be very, very happy to see you. These institutions are populated by waspy Harvard or London School of Economics, lefty elite types who are always happy to steal from a black or brown person, since they get the double benefit of getting richer while being able to display their quote-unquote anti-racist credentials at London or Georgetown cocktail parties. Here's how the dialogue goes. So your country's finances are in a bit of a pickle. No problem, we are happy to loan you the money that you need. The interest rates can be a bit high, but don't worry about it because we're also going to help you with some economic reforms that will make your country more productive. Here's what the IMF and World Bank did to Bangladesh, for example. They encouraged the government to cut down many of the mangrove trees that protected the coast from cyclones, and also to drill holes in the dikes protecting the farmers' fields from the ocean. Then they flooded many of the fields and started farming shrimp that could be exported to the West. The end result was a country that could no longer feed itself since they flooded all of their productive farmland with salt water, and that became a large exporter of shrimp to the West, while also having less protection from cyclones since they cut down the protective trees and poked holes in the dikes. And then the economic profits went to multinational companies and a few corrupt local politicians. You can read more about it in this amazing article by Alex Gladstein. I believe this became the basis for a book as well, and I've drawn heavily on it for this video. Structural Adjustment, great article published in Bitcoin Magazine here. So what does structural adjustment means? It means that the white elites in London or Washington, D.C., most likely, or Brussels, are going to tell you how to run your economy. And this is what you're going to need to do if you want to get that loan. Focus on exporting to the West, even if it ends up hurting the local population. Also provide lots of favorable deals to multinational companies based in the U.S. or Europe, including selling off state enterprises and natural resources to the West. When you do these things, you'll get a high interest rate loan that your local dictator can spend on French wine and fast cars and airplanes. And then a few years later, that tin pot dictator will be back asking for more loans and putting his country further into debt to the West. That's a really quick version of the IMF and the World Bank. There's really a special place in hell for these people, probably with the usurers in the really hot lowest circle, if I had to guess. But knowing these things now, let's listen to the advice that the IMF has for El Salvador these days.
So on El Salvador, IMF staff have an ongoing engagement with the Salvadorian authorities, and the objective is to reach agreement on a new IMF-supported program that would help with the macroeconomic stabilization and adjustment, and also growth-enhancing reforms. Ongoing discussions are focused on policies to strengthen reforms that can be used to boost productivity and economic governance. Addressing risks arising from Bitcoin is a key element of these discussions. And of course, the goal is for the fund to be in a position to support a credible and well-sequenced policy package that is designed by the authorities. With respect to the details on Bitcoin, what we have recommended is a narrowing of the scope of the Bitcoin law, strengthening the regulatory framework and oversight of the Bitcoin ecosystem, and limiting the public sector exposure to Bitcoin.
I love Samson's comment here that the IMF is irrelevant, and indeed they're becoming increasingly irrelevant. But at least in that little speech, you got to hear many of the key words we've talked about: macroeconomic stabilization and adjustment, and also growth-enhancing reforms, as if government and NGO bureaucrats knew anything about starting new businesses and creating productive ventures, since they're really just parasites. Also talking about boosting productivity and economic governance, limit public exposure to Bitcoin. That was really the key part of the speech and why I played it. In other words, the IMF really doesn't like that El Salvador is doing this Bitcoin thing, which has been so good for El Salvador over the past few years. And like any good drug dealer, the IMF would prefer that El Salvador remained a debt addict. Instead, El Salvador's turnaround has enabled it to begin actually reducing its debt rather than growing it as the international loan sharks would prefer to see. We can see here on October 4th, Bukele tweeted, "Today we have officially launched the purchase offer for our external debt due from 2027 to 2052. All holders of bonds of the Republic of El Salvador can access this public and voluntary repurchase. So they're basically buying back their debt because they're doing so well. At the same time, the IMF is trying to shove more debt down their throats. This is something the IMF has been doing to El Salvador really since the beginning of their Bitcoin journey. As early as January of 2022, the IMF was urging El Salvador to remove Bitcoin as legal tender. And one of the great things is President Bukele tweeted this: "I see you, IMF, that's very nice. Bye-bye, we're going to do Bitcoin anyway." None of this is to say that El Salvador or all of its policies are perfect, and there's always the real problem of succession when you have a benevolent dictator slash philosopher king, as Bukele certainly appears to be. But I do think that El Salvador is doing a great job of offering a new roadmap, one that smaller countries can use to sidestep the wealth extraction techniques that the U.S. and other developed countries, in part through the IMF and the World Bank and the whole central banking system, have been using for the past 60 years to extract wealth from these countries. I wish El Salvador the best, and I hope to finally visit El Salvador one of these days. If you enjoyed this video, be sure to hit the subscribe and like buttons. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks all for watching, and I'll see you in the next video.